lagging, leading, and momentum. So these three indicators, if you use them properly, you can make money from market. So the Fibonacci itself is a leading indicator. It can predict where the price will tend. So we can use Fibonacci as what? Support and resistance, entry, and exit. So once we're using Fibonacci levels, we can enter the market based on the levels that the market will retrace from. If you're using Fibonacci extension, which will tell us where the price might heading to, then we can exit at the Fibonacci levels that we think is suitable to us. And then that will give you an entry and exit. So let's say if the market pumped, and then you put the Fibonacci swing low to swing high, then market retraced one of these levels, okay, maybe 0.382, maybe 0.50 or 0.618, which is a golden pocket. Then if you find any other confluence, like, is it support? Yes. Is it respecting your trend line? Yes. Is it your moving average support? Yes. Do you have the RSI above 50? Yes. You see? So now, do you have a candle confirmation here or any other pattern which is reversal? In that way, you will have a confluence zone. This area, we call it what? Confluence zone or confluence area. If you taking a trade based on the confluence zone, you're taking high probability trade. What you're taking is high probability trade. And that's the end of the day what I want. I need to take high probability trade, guys. Okay? High probability trades. So in that way, if you trade and then you put swing high to swing low and then measure Fibonacci levels at the top, which is the extension, that will give you your exit points. You have your entry point here, then you will have your exit points either 1.272 or 1.618 or up to 2. So it's up to you where you want to exit the market. But Fibonacci can predict for you the points that you need to exit from the market. So you can take TB1, TB2, and TB3. You can do it that way as well. You can exit the market gradually while the price is pumping to the upside. That's why I love Fibonacci. Fibonacci is a great tool. Okay? It's a great tool to use it. The objective of this class is, number one, identify the terms in Fibonacci sequence. So the golden ratio is the where all the traders are concentrating and looking at. It's what they call a psychological level. So on every trader that want to trade from financial markets, they're looking into the golden ratio. Okay, golden ratio. If you are trading price action plus FIB levels on a FIB strategy, you will have complete strategy that you can trade from the market. If you use that, in that way, you can make money from the market. So if you know what you're doing, remember those two words, what I say all the time? How it works and how to apply. Remember always those two words. If you know how it works, you can apply. If you don't know how it works, you can apply. As simple as that. In that way, then they can provide you additional level of support and resistance, hence the turning points. Remember what I said? They can give you the turning points. They can give you the exit point of the market. Where the market, if you look in the market, is creating higher, high, higher, low, okay? And then you enter from somewhere here, and the Fibonacci extension is giving you one of these levels to exit the market, means the market will retrace from here. Then if you combine with other tools that you have learned so far, like what? Chart pattern, candlestick patterns, divergence, all these kind of things, you will see them here at the turning point. Remember always what I say? Market is a dot, you need to connect. There's no only single confirmation that you can trade on. You need to have multiple confirmation when you're trading. And that's what you want at the end of the day. As a technical analyst, it's your responsibility to find different confirmations, whether you exiting the trade or whether you entering the trade. And that's what I want. I need to take high probability trade, look in different angles. When I'm exiting the trade as well, I need to look those things too. Do we have any pattern which is giving me reversal? Do we have an above top? Do we have rising wedge? Do we have head and shoulder? Okay. Do we have triple top? Do we have rounding top? So all these reversal patterns will appear also at the top. Then again, I'm going to look, do we have a divergence? Do you have a regular bearish divergence? Yes. Then do we have candle confirmation? That's my last confirmation. Yes. Do I have a shooting star, hanging man, bearish engulfing, bearish harami, and dark color cover? All these kind of candles which are giving you reversals. Then you know what you're doing. Do you see, guys, how you combine things to make sense? Okay. When you are technical analysis, you're becoming, you analyze the market deeply to dig more information out of it. And that's what you want at the end of the day. That's what you want. That's what differentiates between the winner and the loser. The winners always look at the market in different angles, where the losers only looking the candlesticks. They're chasing candles. So 1.618, as I said, is known as a golden ratio, or the phi, the inverse of a 0.618. That means all the Fib levels are derived from the golden ratio. If you look at the sequence of the Fibonacci numbers, any Fib level, if you divide either way, upside, forward or backward, then you will find all the numbers. You can extract all the numbers from Fib levels, one by one. Who is in AJ Crypto? Somali community. When they put in the narrative or the bias of the trade, how many confirmation they showing you when they're taking the trade? A lot. Maybe 3, 4, 5, some of them. And have you seen them how they're making the profit quickly? Trades moving directly to the direction and taking it. Why? Because they are taking high probability trades. Okay, once you are taking high probability trades, the winning side is more than losing side. And that's what you want.